important conversation. I'm respectful.
Nice, Senator.
I literally just said too nice, bro. It's not Senator Porter on YouTube, is it? Nick you? Senator Porter.
Oh, it's knowledge to currency?
Oh, right.
Yeah. Oh, it just popped up on my thing. I got a notification. Let's go. Like that.
What's the number 2, huh?
Yeah, number 2.
There we go. There he is.
It's fire.
Oh, dude, you're live.
How does it look? What's the quality like?
Looks like this.
Yeah? Look like I know what I'm doing?
That's because you do know what you're doing.
Oh, I'm asking you guys, does it look like I do?
Yeah, you got those blue LEDs.
Yeah?
Yeah, you know what you're doing.
Fire.
I'm convinced.
Make sure I got my presentation here. Cool. I actually could share. Huh?
Hey, Sean.
Sean's in?
Yeah, you got a couple of places in here.
What's up? Let's go. And drop your city or state in the chat. Friday funding call. Just going to give it a couple of minutes before we get started. Let everybody load in here. Hey, let's go. All right. I think I have to do this to screen share. All right, perfect. All right, guys. You guys can hear me okay, right? Perfect. I want to first say I appreciate everybody that's joined the call. Today is the first Friday funding call. I'm going to go over a subject that a lot of my friends have asked about, and we're going to talk about San Diego in particular, but this is a national program. So if you need help, even though I'm not licensed, I have licensed real estate agents and mortgage professionals that can help you get exactly what you need when it comes to the program. The program that we're going to discuss today is called the USDA loan. It is a very slept on product. And after talking to friends, a lot of people don't know this information is out there. It's not like I invented something, but it is something that people aren't, told about, because a lot of professionals don't understand how powerful the program is. So got a brief presentation that I want to share with you guys. Let's look at this first. Let's see. All right, can you guys see it? All right, perfect. All right. Didn't come up for you?
It's the black.
What about now?
Yeah, you
good to go?
Yeah.
All right. Technology is awesome when it works. All right. So how to use the USDA loan zero down program and why it's so powerful. So the challenges in San Diego for homeowners a lot of times is the high medium home price and the availability of homes. So the market is starting to shift. So it's important to take advantage. Timing is everything. So if you were to think 2 to 3 years ago, there were not a lot of houses on the market, and a lot of people had to, in a lot of ways, compromise getting into real estate transaction because one house would hit the market and you'd have 15 people trying to buy the home. So the actual person selling the house was in the driver's seat, and they were able to, you know, really pick the offer that they want. We have people removing contingencies on their offer. So if you bought the property and there was something that was wrong with it, it's basically on you. Um, and the market today is a lot different. Interest rates have not dropped. The president wants the Fed to drop the interest rates, and they keep fighting back and forth. But in a way, this could be a blessing for people now because individuals that wouldn't have been bid out by people that have more money, the market's kind of cooled off, so you can take advantage of that. With financial stuff, a lot of things is timing. Timing means more than anything, and if it's the right time for you, you can take advantage with this program. So, what I love about this program is no money down. So, a lot of people that use VA loans, that's a beautiful thing about a VA loan is because you don't need a down payment. So let's say you're saving to try to buy a house and you just can't get over that hurdle because you have other things that you paying for. You want to have, 6 months of reserves that you save, and if you were to buy a house, that will wipe out your total savings. This program could help somebody like that. So it's a slept-on program. So I'm going to teach you guys more about it. So kind of covered like the challenge of high cost in San Diego. The median price for a home now is $965,000. Um, the USDA loan is zero down program, removes a significant burden of the down payment, promotes specific for rural areas and suburban communities. So you don't necessarily have to move out into the sticks, but you can. Some of these communities, people live in them now. And let's say you were buying a home in Fallbrook and they're telling you to use FHA or use conventional financing, you could be eligible for this program and nobody's offering it to you. So now you're being told you have to put money down when you don't. And over 77.5% of San Diego is eligible for these programs. So I'll also give you examples of homes and counties that qualify or cities that qualify in this county. So USDA loan, the program is no money down. USDA loan is a government program. It's backed by the government, so that's what makes it unique. So they usually always have funding, like with some of the Cal HAFA programs. A lot of times people will apply for funding and immediately it's gone. So they couldn't qualify for the money from the government, or excuse me, from the county because the county has ran out of money. Well, this is government funded, so it hardly ever runs out of money. So no down payment, reduced mortgage insurance. If you compare it to like FHA, you put down 3.5%. You have to pay mortgage insurance until you have at least 20% of equity. With this program, they don't have mortgage insurance, so it has competitive interest rates, lower cost, and your no money down is obviously the thing that people love about the program. Key eligibility requirements. It does have eligibility requirements. So it has income restrictions. But in San Diego, because it's so expensive to live here, it's a lot higher than if it was in Iowa or Idaho. So 1 to 4 people in the household, it has income of $193,050. If it's 5 to 8 people in the household, it goes up to $254,850. So let's go over the credit requirements. Some people can go down, depending on the lender, can go as low as 580 credit score. But I'm using 640 as a credit score. When in my experience of lending, the lower your credit score, you can get people to qualify you, but I wouldn't do that. I'd get your credit score up higher because you'll have better interest rates and lower fees. Um, when you have lower credit scores, even though there are places that will lend you money, they also will take advantage of you. And as when I was a lender, or most lenders, it's their fiduciary duty to try to help you be in a better position. So if you need people to help you fix your credit, I can send you to nonprofits that I know that can help you get a higher credit score. That higher credit score can do, it can put you in a significant better space. And then your debt to income. Your debt to income is important. For this program, is 41%. It may go higher, but I try to stay under 41% just to make sure that you get approved. If you don't know what debt to income is, it's basically saying if I make $1,000 a month, we'll just use like basic math. I don't want to use over 40% of my income. So that means that if I were to get a mortgage payment, I don't want it to be over $410 a month, because that's 41% of 1,000. So you want to try to stay under that number, depending on how much you make. And a loan officer can explain that to you in detail based on your income versus your liabilities. You must also be a U.S. citizen to qualify for this program. So let's look at some of the counties. Alpine, Ramona, Julian, are some of the counties. There's more counties than this, but this is just some that I can think of that are not too far away from the city of San Diego, but are still eligible for the program. And some people may look at them as rural, but I've also found homes in Fallbrook, some parts of Escondido and Vista can qualify for the particular program. So depending on where you want to live, if you're willing to move 20 miles out from the city limits, you can actually do more and get more for your money. San Diego housing market in the current snapshot. Average home in the city of San Diego is over $1 million. There's increased inventory. So like I said, 3 years ago, there were less than 3,000 homes on the market. As of right now, it's 5,664 homes on the market. And days on market, if you even go from last year, 16 homes it takes 16 days to sell a home on market. At the current market is at 28 days on market. And then you can also use this to buy townhouses and condos. So it's not just only for farms or single family homes either. And then market trends. So that's also talking about days on the market. So what I was talking about, timing is everything. The bidding wars are not as prevalent as they were when rates were lower. So to take advantage of this now is a good thing, because if you get into the market now, even though rates are higher, when rates do drop, that means more buyers will come in and they'll start to bid you out. So if you're on a budget, now is the time to take action to try to buy something, because there's not as many people trying to buy, and it gives you more of a fair chance to negotiate the price of the home. So people are dropping the price because they need to move the inventory, and people are willing to negotiate with you because you may be the only buyer trying to buy at the moment, and they need to buy, or excuse me, need to sell. So they'll be willing to negotiate price with you. So you can use that as leverage in helping you with closing costs. With this loan, you can roll in up to 6% of your closing costs into the actual loan. So like, let's say for instance, you don't have a down payment, you don't have money to pay closing costs. Depending on the seller, they'll let you average, or they'll let you combine those closing costs into the loan amount, and also give you a discount on the sale price of the property. So it just gives you more leverage. So it's a buyer's market right now. So let's compare the USDA loan to other programs like FHA and conventional loans. So like what we said, minimum down payment. There's 0 down payment for USDA versus FHA, which is 3.5%. Credit scores 580 and up. That can change your actual closing costs. For conventional loan, they can put down 3% or require you to put down 20%. And then for mortgage insurance, upfront mortgage insurance is cheaper on a USDA loan. So that's when we're talking about closing costs, your closing costs will be cheaper. So there's 1% upfront fee for the loan versus FHA is 1.75%. And then PMI, unless you put down 20% on a conventional loan, they're going to require you to pay PMI. And private mortgage insurance is protection for the bank in case you default. It's not helping you, so it's not a good thing. If you can avoid having to pay private mortgage insurance, that's money that can go to help you pay down the mortgage so you can own the home faster. So if you can avoid things like that, that's a good thing. And then the interest rates are very competitive for this program because I said it's a government program. It's basically trying to help increase the population in these rural areas to grow and to show growth. So that's why they are one of the reasons why they even came up with the program. For FHA, the interest rates are competitive as well, and with conventional loans, it's based on credit and assets, and how much you put down can change the rate with that as well. And then there are restriction locations with the program with USDA, but like I said, depending on where you're looking to live in San Diego, a lot of people commute. I know folks that live in Temecula and their business is down here in San Diego, and that's like over an hour that they have to drive to get to events and to do stuff with real estate, and they still are able to operate. I'm not even saying go all the way to Temecula. I'm looking at places that are 20 miles away, or even less at times. So the financial impact, let's say we have a house that's $650,000 and it's eligible for USDA. These are the fees that we're talking about. So USDA loan, no down payment, requires no down payment, making homeownership accessible and significant lower upfront costs. Upfront costs of insurance, $6,500 at 1%, and closing costs can be anywhere from $0 to $15,000. Monthly payment for that loan, if we're looking at $650,000, would be $4,341 as an estimate. With an FHA loan, it will require you to put down 3.5%. So that's significantly higher. That's $22,750 with upfront mortgage insurance of $10,977. That's the 1.75%. And estimated closing costs can be anywhere from $25,000 to $40,000. I'm sure that's a sliding scale depending on credit, how much the person puts down. And that payment is $4,022. So if you look at the difference, it's a difference of $20, but you don't have to put any money down. And then if you look at conventional, that's 5% down. That's $32,500, offering no upfront mortgage insurance, but higher initial cash out, and estimated closing costs are $35,000 to $50,000. And then that monthly payment is $4,212. So if you look at these scenarios, would you be willing to move out a little further to avoid putting down 20 to 40,000 or 35 to 50,000 just to save like less than $200 a month? For me, I'd be willing to look outside the city limits of like San Diego downtown to be able to not have to pay so much money down. Why USDA loan matters in San Diego: accessibility, open home ownership to those that have significant income limits. It's really to try to help people low to moderate income. Crazy part about San Diego, that income is like over $82,000 a year. In some places, that would be like you'd be in the top, or actually by American average for a single person, you'd be in the top 1%, making like 80,000 a year. San Diego, that's not the case, and that's why you see so many families living together, so many people living together. So some adjustments could be made just by you moving out a little further. You get more home, you'll be able to have more options. Over 77.5% of San Diego County falls with the eligibility limits of the program. So it's a financial advantage because you'll have lower costs for compared to conventional loans, and the long-term benefits you will be able to make that first step to have home ownership. Because a lot of times, that first person to buy a home changes it for the whole family. Because as they continue to make payments, this is the only thing that I can think of where just by living in your home, you actually are gaining value, and you're able to sell this particular asset just by living in it, and then you can use that asset to leverage to start a business, to buy other property. I mean, you can do so many things, and all you're doing is living in the home. Versus if you pay rent, with rent you have freedom because you're not tied to a particular place. But if something goes wrong or whatnot, you don't have control like of the property versus if you own it. So the USDA loan is zero down program. It's a powerful pathway for Americans to open homes. Now I'm going to open up the floor for Q&A. I think we got some time left now. The presentation is finished. So let me see some comments, and I'll try to answer any questions. Let's see, looking at the comments now. What's happening, Sean? What's happening, Eric? What's happening, Andrew? What else in here? Does anyone have any questions? Can we see the demo? Oh, yeah. So I've been working on an actual a GPT, or I guess you would say an AI agent to help you. So as an example, do screen share again. All right. So this is the USDA website. You can't hear?
Can't see it.
Oh, why now? All right. So this is the USDA website. Go to this. So what you do is you get an address. You put it in the website, and then it'll tell you if the property is eligible. It lights up green is eligible. So with this particular house in particular is a manufactured home, but I found some really nice homes in Fallbrook. Let's see. Where's that house? It was brand new. I sent to you. All right. So here's an example. House was built in 2019. Really good on the inside. Nice layout and whatnot. So you take the address. That's how you find out if it's eligible. And it's eligible. So this is a zero down program. So if you didn't know that this was eligible for USDA, you might go speak with the loan officer, realtor, and they would tell you to do FHA or conventional to buy this home. That is a disservice to you because now you have to put down a down payment when you really don't have to put down a down payment. And this should be discussed. Like, people should know as an expert. Like, if I'm your representative, I need to give you all the information so you can make the right choice for you, not me telling you what to do or making a choice for you. That's not like how it should work. So I can show you each option, show you the cost, and then ask you as a professional, here's the 3 options that I think are good. And then start to ask what works best for you. What are your goals? And then be your advisor, not just trying to help you get the house and move on to the next sale. which unfortunately happens to a lot of people. I never did it that way, but I have seen people do that, and they try to limit the options because they don't want to overwhelm the consumer. But if you're good at what you do, the person shouldn't feel overwhelmed. They shouldn't feel rushed. They shouldn't feel they think, oh, another thing, I will say USDA loan does take longer than a conventional loan, but right now, depending on where you live, it's not as busy as it normally is right now. So a lot of these people can process these loans faster than normal. And that's why I'm saying time is of the essence, because with the market not being as busy as it normally would be when rates are low, you'll get a lot more care, and they need these loans. That the banks need the loans to happen every month. So it's like coming into a restaurant that's not busy. You're gonna get better service. Let me see. Try to read, see if any questions. How do you know if the income qualifies? Oh, that's a good question. So, I made a tool with AI that can actually help you see income wise if you qualify. You basically put your gross income and your liabilities into the system. Once you do that, it will actually tell you if you qualify. But what I would recommend you to do, if you actually want to look if you actually are eligible, is talk to an actual loan officer, have them pull your credit, look through all your information, and then they can tell you what you qualify for. Um, they'll actually be able to look at your liabilities. They'll look at your W 2s and stuff. Don't go just based on your credit score, because there's one thing to get pre-approved for something, but when you actually have a commitment letter from the bank, that's completely different. So that means that they've looked at your income, they looked at your assets, everything has been manicured to a T, and when they give you that commitment letter, that's the same as cash. And they can do that without you having a property. So I would recommend speak to a lender. If you need a lender, I have a bunch of lenders in this chat, or just reach out to me directly, and I can get you with somebody that has used these programs before, and that will has been vetted and will take good care of you. Because the last thing you want to do is have somebody direct you to the wrong product. It's almost like like a doctor misdiagnosing you. What that expert should be doing is finding out what your goals are, what you want to do, and then they should, give you all the information to make the right choice. What's other questions? I'm reading through the comments, so bear with me. This is definitely an unutilized program. Thanks, Nick. What's happening, brother? Can you share the link to the USDA? Oh yeah, absolutely. Got you, Sean. If you use this link and drop in an address, you should be able to see if the property is eligible. And I'm working on an agent that will not only tell you if it's USDA eligible, but it'll tell you what other loan programs that you could use based on the property address. What other questions you guys got for me? Actually, I'll actually show you the thing I've been working on. Screen share. Wait. What the heck is it? Oh, here we go. I think this is it. this spot. No. Got too many screens up. No, that's not it. Hold on. Let me close some of this stuff. Okay, so share. Yeah, too many AIs. I know. Got too many up for sure. Urban development. It's not letting me screen share everything. Yeah, maybe I'll pull it on this side. All this on Safari. Oh man, it's not good. Okay, so let's do that. Okay, I think I got it. All right, apologize about that. Okay, so I've been working on this AI agent. So I also basically taught it about USDA, asked it to not only just tell me if properties are eligible. So like as an example, you could take an address, drop it in here, and it'll tell you if it's eligible for the program. But I also asked it to ask based on the schools and the crime rate, what are the best cities to use the loan or you use the actual program. So then you could literally look based on these particular areas to find property, and you'll know that it's in a good school system for your children, and it has low crime rates. So then we basically could just take this particular city as an example. Look for a home in that area. Let me see if I'm going on. Going on Zillow. So let's see. So I found the address on Zillow. Oh, didn't go to the address. I dropped the address in, and it tells me that the house is eligible versus the way I originally showed you, where you go to the actual link on the website. I taught my agent how to actually look that up for me. And then here's what the house actually looks like. And you see it? yeah, so as you can see, it's a really nice home. It's already had a price cut in a good school district. Inside the house is really nice. Safe area versus like if you were to come to San Diego, you may not get a house as big, may not be in the best school district, may not be as nice. So you don't have to pay a down payment. So you can use that money to help you upgrade the house to make it exactly how you want to make it. And this area of town is like not too far away from, I think, Fallbrook. Hold on, let me double check. Yeah, so it's right above Vista. So you don't have to go all the way to like Temecula, just above Escondido and Valley Center and all that stuff. So it's in a good area. What other questions? Can you use USDA loan program to work for multifamily or duplexes? Huh? That's a good question. We're going to ask the bot just to test it out. I know the answer, but I want to try the bot. So let me share the screen on that. Stop sharing. Let me review this side. So Sean wants to know, can you use USDA loan earning loan program to buy a multi-unit or duplex? So check it out. I misspelled it, but it'll still work. The simple answer is no. I knew that answer, but so you could literally use this agent to help you underwrite the loan as well, so that you don't go in just having the loan officer or the real estate person tell you anything and everything. So you both will be educated on what's going on. So that's why I love this agent that I made. So key things with USDA, it has to be your primary residence and single family home. So you can't buy a duplex or you can't buy income producing property, but you can buy a townhouse, you can buy a condo, any type of single family will work. Any other questions that anybody has? Going through the comments real quick. Also, what I was going to say as well, if the USDA is not the right product for you, then that's when you do pivot to CalHFA, which the different counties can give you, or excuse me, different money comes from each city. And so like San Diego has CalHFA, so that is an option, and then they'll give you help with your down payment. The numbers fluctuate. Sometimes 25,000, sometimes it's more. If you did have a duplex that you found or a fourplex, You can do FHA. Um, and sometimes if they're income producing, they'll let you count future rents for that. Um, let's see. And I use USDA loan for new construction. Yeah, you can actually use for new construction. For new construction, how that works is the person that's actually doing the work has to be vetted through the lender. Um, or like also for construction, if you were to find a house that needed updating, like that house we looked at, if you want to purchase it and you had a budget of how much you wanted to put into the property, they give you 6 to 12 months to do those renovations. So they do have USDA construction loans as well. So you could either build a house from ground up, or you could buy a house that needs work and do the improvements and incorporate those improvements into the loan. Any other questions anyone has? What's the credit score you need to qualify? Credit score, so depending on the lender, some lenders could go as low as 580. I would say no lower than 640, just to be safe. But the higher your credit score is, the more options you have, and then the less compensating factors you'll need to have. So, like let's say you have a lower credit score, you can still buy, but what the lender may require you is to show more stability. So they may, want you to have more assets, or they may want you to have a cosigner. So I suggest if you do have any credit problems, we do have resources to help you get those credit issues resolved, and try to get your credit score as high as possible before you go down the avenue of trying to purchase. What are the closing costs, and can you roll the closing costs into the loan? You should be able to roll 6% of the closing costs into the loan. Um, Closing costs will be different depending on the actual size of the house that you're trying to purchase. Also, your credit score can affect your closing costs as well. So that's what I'm saying. My advice to you is to try to get your credit score higher. Higher your credit score is, the more options you have, and it reduces your costs. Can I use gift funds? Yes, you can absolutely use gift funds for this program, just like any loan. If you want to get a gift from family, that's definitely something that's doable. But the beauty about this program is we want you to not have to get gift funds. We want you to try to get into this deal with no money out of pocket, and there's people that are doing that. And you guys don't have a lot of questions for me. Mm, think we went through the presentation. I told you about the bot. Um, I want to continue to do these programs every Friday. I want to give people more information about funding. I don't want it to be a mystery. I want you to understand what you're getting involved in, like give you strategies so you can be successful. Um, like I said, I have a lot of resources and people that are licensed experts that can help you, but these conversations are what get those, um, I guess, get things in motion to try to help you be successful. So that's really all I want. I've been in lending for such a long time and seen so many different things come and go, but these programs are not secrets. They're just not spoken about. When will the bot be ready? I'm thinking the bot should be ready this week. Been tweaking it, testing it out to make sure it works. I want it to be perfect, but I know that right now I think it would be ready to go. But I want to make sure I add everything to it, because the more I think about it every day, there's new things that we can add to it. Because for real estate, it can show you not only if you're buying a property, what's the potential of developing that property into something else. What lenders that are or excuse me, not what lenders, what loans actually qualify, whether it could be USDA, FHA, or conventional. Like from what Sean's question was, let's say you were looking at a house that's not eligible for that program. I want the bot to be able to tell you, well, it's not eligible for this program, but it is eligible for these programs. And then we can get you with one of our experts to help you. But we're right at about 45 minutes. If nobody has any other questions, I'll save this live. And you definitely can reach out to me at Senator Porter on Instagram. You have the YouTube channel. Um, you can even call me. A lot of you guys know me already, but I'm here to service the community, and I want to build this community out so that people have the right information and get this information out. It's free. So I appreciate all you guys for taking the time to be with me for this funding Friday. It's the first one in the books, and let's build this thing out and make it even better. So peace. In the words of Dr. Dre, just chill till the next episode. Stop sharing and stream. All right, guys.